Hello, this is Paul Harris for CGS. Today I'm speaking with Ryan King, VP of Business Development at Calibre Mining. If you like these videos, please subscribe using the button below. Let's start with a little bit of history about the company.
Sure. Yeah. Well, let's, as you said about the group behind it, and I think that's really important. And if I go back to a couple years, if I may, and just talk a little bit about our last venture, which was called New Market Gold. And in that scenario, it was a public vehicle. Doug Forrester, Lane Johnson, Doug Hurst, Ray Threlkeld, myself, Darren Hall, a lot of the same board and management team that you see at Calibre. We started a company called New Market Gold. And in that, we acquired 3 producing gold assets in Australia because the team, Doug Forrester, an economic geologist, Ray Threlkeld, a geologist with decades of experience in the business, and Douglas Hurst, again, a geologist with decades, recognized a geological opportunity. They thought they could find additional resources, expand resources, and make new discoveries at those mines. And fortunately, a lot of times in this business, there's luck, but fortunately we did. And we went on to find one of the highest grade underground gold mines in the world that's called Fosterville. And we merged New Market with Kirkland Lake. And so it's a little bit analogous to that scenario with Calibre. Albeit Calibre, if you look at the suite of assets, of course, we had an exploration company prior to 2019. We were focused on the Barrosi concessions, which are in the northern east part of Nicaragua. So what brought us there was back in 2009, we acquired these assets from Yamana. And again, it was Doug Forrester that looked at the geological land package, exploration land package that we acquired, and said, over 8 million ounces of gold has been produced there, over 300 million pounds of copper. So this is known as the Golden Triangle in Central America. And because there have been past production, Noranda has been there, Falconbridge had been there, we recognized there could be an opportunity because there were quite a significant number of years of underexplored activity, not only within all of Central America, but particularly Nicaragua. Obviously, with things picking up again, the group decided, hey, let's try and buy production again. Look for opportunities where there's either geological upside, in our opinions, or there is a potential for expansion, economic, organic growth through optimization. And so we of course, have been aware of B2Gold for many, many years. Some of our directors have actually worked with Clive when he was at BEMA. So there was a long-standing relationship there, not only because we were both in country, but because of industry relationships. After 2 years of negotiating, we were able to strike a deal, a win-win deal, where we acquired the El Limon and La Libertad gold assets, the producing gold assets, the Pavon development stage project, and all the exploration ground around those assets.
Thank you. So you've seen the opportunity in Nicaragua for quite some time, for a decade. With the 2 gold mines you've picked up from B2Gold, you're following a very different approach to sort of managing them and getting the potential from them. And I'm talking here about the sort of hub and spoke approach you're talking about. What does that actually mean?
Yeah, that's a good question. It was a new term for me as well. Hub and spoke, you think about it from a really logical, from a hub and spokes on a wheel. The spokes would be multiple different sources of ore. The hubs are 2 processing facilities. The architect behind this, his name is Darren Hall. He was at Newmont for over 25 years, an operator there that rose up the ranks and has worked in many different jurisdictions. I kind of know him as a cost cutter, an optimizer, a strategic thinker in operations. And this is what he did here. He came in, he looked at the operations, he looked at the opportunity and said, well, rather than having the 2 standalone mines and mills. Let's break down those walls and look at Nicaragua as our canvas or our landscape, and say, okay, what can we haul economically? Because the infrastructure in country is very good. As you've seen, Paul, you were there. As we've done our analysis, we're about $25 a ton to haul ores up to 250 kilometers. So when Darren took a step back and he recognized that, he said, well, rather than just processing ores from a particular property at a particular mill, let's break that down and say, well, the Le Mans facility, for example, it's 500,000 tons a year that it can go through that mill. Yet at Le Mans mining lease and concessions, we have between an indicated and inferred close to 1.5, 1.6 million ounces in those categories. And so let's look at a scenario where we start to haul ores down from Le Mans down to Libertad, because Libertad has excess processing capacity. One of the first things he did was idled out one of the ball mills. So it's got two lines going into a SAG mill. He idled out one of those ball mills. So reduced the throughput in the mill from 2.2 annually to 1.6. And by doing that, we're already recognizing out of that, we're already recognizing a de minimis reduction in production. But what we are recognizing already is probably on the order of US $500,000 to $550,000 of savings per month, which is affording us to reinvest in the business in other opportunities to optimize. It's going to fund half of our 2020 drilling program, for example. So by doing that, it's also a strict focus on production with a margin, not just production to get up the ounces. And in the next couple of weeks here, we'll be coming out with a new multi-year outlook, which we call a 10-year outlook for the assets. And in Nevada, with our CEO, Russell Ball, they implemented this and executed on this hub and spoke operating philosophy in Nevada. So it's been done before by the key principals here. And so what's interesting, Paul, about this is now our exploration landscape to bird dog new potential structures or exciting exploration targets, it has evolved and expanded.
Thank you. A focus on profitable ounces certainly is a much healthier business model than just focusing on ounces for ounces' sake. You had record production in the first quarter. What is the sort of the run rate you're looking at or targeting?
Our guidance for Le Mans in 2020 was 70 to 75,000 ounces. Historically, I think the average has been around 50 for at least the last sort of decade or so. And the same for Libertad, 70 to 75,000 ounces. So originally it was 140 to 150,000 ounces. One of the things that we're recognizing as we're mining is we're seeing smaller vein splays coming off of the main structure that's affording us additional tons and material for the mill. So I think if memory serves, in 2019, we were positive reconciliation on tons and about the same on grade versus the model. We'll be coming out with some new guidance. We've been on temporary suspension for the last 2 months. Our original guidance was 140 to 150. We are recognizing positive grade, positive tons at Le Mans, as evidenced by Q1 actual production. And 42,000 ounces consolidated gives you a run rate of roughly 170,000 ounces. We think as we get into Pavon, hopefully the run rate is up to close to 1,000 tons a day in 2021. And we'll be working towards that. It won't be, snap of the fingers and that'll happen.
Thank you, Ryan. I'd like to follow up a little bit on the hub and spoke approach to the management of your mineral inventory, and particularly what you just said about how that gives you a different way of thinking about exploration and different perhaps targets or goals for exploration. That for me sounds very, very exciting, sort of changing the way you're looking at that. And in terms of exploration, you've just released a maiden resource at the Pantheon area or Pantheon deposit. So how does that fit into the overall sort of hub and spoke plan?
Yeah, that's a good question. Some of the ore sources that we have been hauling down from Limon down to Libertad have been from the underground mines. At Limon, we've got this one high-grade open pit, currently Limon Central, which has a string of pearls. It's over 2.5 kilometers, and will continue to advance on the other pods. And what we're recognizing is that the mine to mill balance there at 500,000 tons a day is probably a good fit, a good balance. However, that being said, we've also got an underground ore source known as Veta Nueva, an underground ore source that's been operating for decades now, not decades, but the last number of years for B2 Gold, several years, Santa Pancha. And Santa Pancha is an underground vein structure that is now coming close to bifurcating with this new structure, this new splay called Pantheon. And yeah, we had some great success drilling there earlier in the year. It was one of the high priority targets for us within the Limon camp, and great intercepts between 5 and 10 meters, ranging from 5 to 17 grams per ton gold. And the exciting part for us is that Pantheon is located only about 100, maybe 150 meters away from the Santa Pancha underground infrastructure that's already in place. And so affording us the opportunity to get into Pantheon fairly quickly. So it's some underground development over to Pantheon vein. We don't know the exact mining method quite yet, the sequencing. But as we get closer and start to understand it more and model it up, we'll have a better idea. But it looks very analogous to Santa Pancha, maybe slightly higher grades, as you probably saw in the recent announcement of resources. And that's a maiden resource, so we do think there's potential to expand that. Initial global resource indicated and inferred about 95,000 ounces. How does that play into this? One of our initial thoughts are, potentially the underground ore sources get hauled down to Libertad, and the open pit sources go through the Limon processing facility. So, trying to schedule it out and look at a sequence where you can be mining underground and mining open pit, but not have a bottleneck with the mill. At Limon, it's 500,000 tons, so not have that bottleneck, but utilize the infrastructure and haul those ores down to Libertad, because you have not only the excess capacity, but these could feed into the 1 million, 1.6 million tons that we're processing now, but the grade is substantially higher. So you could see this organic growth profile in 2021, 2022, 2023, and beyond, as we find more of these ore sources and analyze and evolve the hub and spoke. But Pantheon, a great start for us. And then to expand on the exploration footprints, we'll be looking at other things outside of the concessions we currently have for exploration targets. As we analyze this, we potentially by 2021, we would have 1 million tons of excess processing capacity at the facility. So you look at, between 2 and 4 gram material filling 1 million tons. That has an incredible amount of increased production and net asset value for the company. Hence the reason why we've expanded our drill program.
Thank you, Ryan. Well, it sounds like you've certainly got a lot on your plate and a lot of potential there. And I think you mentioned you're looking to give some sort of 10-year outlook. So you're obviously planning on being there for quite some time. What is the overall sort of strategy of the company long term? What do you want to grow Calibre Mining into?
It's a great question. It's always hard to answer a question like that. Well, I guess maybe I'll step back. When we started the business and restructured it again, we've always been involved in investing in ourselves, so buying equity in the market, buying equity in placements. And back at when we acquired the assets in 2019, everybody on the board, everybody in senior management invested in the company. So I think collectively now between board and management, we own roughly about 6% of the company. And we did that because we believe that the best way to run a mineral exploration, development, and producing gold company is to be owners. Think and act like owners, in the best interest of shareholders to create value. And if that means acquiring additional production opportunities, so be it. If there's an accretive track to do so, I think so be it. If it means us merging with another gold producer to create a better product, a more diverse product, then so be it. In our organization, there's no big golden parachutes. There'll be no social issues when looking at and analyzing M&A, mergers, acquisitions, to ensure that our shareholders succeed and see value out of a type of a transaction. For now, we think the best approach is heads down, work hard, and execute. I think that's a really big thing for our group is do what we said we were going to do, execute. So for now, Paul, it's doing that. But we'd optimally like to probably be in a wheelhouse of 2 to 3 countries, between 250,000 and 500,000 ounces of production.
Well, thank you very much for such a sort of detailed and comprehensive update, and I look forward to hearing more about the execution of your plans going forward. Thank you very much for joining us today, Ryan.
Thanks, Paul.